Good morning. We are pleased to welcome you today for our discussions on our year-end December 2025 audited financial reports. Before we start, some disclosure. This presentation contains statements related to United Finance business, financial conditions, and result of operations from published information. Any statement or comment which has a meaning of future prospect or is forward-looking are only predictions and are not guaranteed of the future performance and does not constitute any solicitation to buy or sell any product, service, stocks, bonds, or to engage in any trading strategy, and should not be relied upon and considered as an advice for making any investment decisions. Due cautions must be exercised that any such forward-looking statement or comment are and will be subject to both known and unknown risks, uncertainties, and factors related to the operation and business environment of the company that may cause the actual result of the company to be materially different from any future result expressed or implied in such forward-looking statements. By accepting delivery of this presentation, the recipient agreed to accept and be bound by the statement, restrictions, and limitation sets. So the agenda of the presentation today is we'll give a small introductions, overall company's overview, leadership team presentation, core focus areas, and the financial performance for the year 2025. So the company established in 1997 and listed in Muscat Stock Exchange since July 2022. We currently hold 9% of FLC market share. We have a head office in Muscat, and we have a workforce of about 150 people with Omanization of over 90%. Our major shareholders is Oman Hotels with 34%, Global 25%, Al Saud Investment 8%, unlisted United Securities 5%, Abdullah Khayari 5%, and others 23%. So we operate in retail, corporate SMEs, and we also offer deposits, corporate deposits with flexible scheme in UAC. The head office is in Muscat, and we have 9 branches across Oman, and at the moment we have more than 10,000 active customers. The board of directors comprised of 7 members. Our chairman Abdullah Al-Khayari, Hassan Ihsan Nasib, our deputy chairman, Talal Hassan Nasib, board member, Hussam Hisham Bostami, board member, Ihab Makbul, board member, Mohammed Raisi, board member, and Faisal Ali Jafar, board member. All bring to UFC solid experience, business acumen, and good governance outlook in UFC. The senior management team comprised of 5. Myself, Nasser Rashdi, I've been in UFC for now 4.5 years. Fawaz Riyam is chief business officer. Mahmoud Al-Hadi is AGM HR and is also in charge of collection recovery. Mr. Nanda Kumar, our chief risk officer, and Mr. Indika, our chief financial officer. The focus continued to be around 6 segments. 1, the people. So we continue to invest on performance management, talent management, engagement, and training. We continue as well to focus on our process, enhance customer experience through loan origination assist process, revamp customer touchpoint, resolution management, automated process, and documentation management solutions. In the system, our aim is to be a paperless company and that provide customers seamless customer experience and convenience through digital and content management solutions. On the financial side, we continue to focus on the portfolio growth, focus on new product development, enhance our fee income, and focus on retail, and continue to de-risk on existing corporate portfolio by selectively embodying good quality corporate assets. We have a clear funding strategy in place, and we enjoy a great dealer relationship where we source businesses. Collection recovery is one of the pillars for the company, so the focus continue on the right of collection focus. We have reorganized the team, we have daily reviews, and our targets to the collection team align with overall company's targets. In the past few years, we focused on branch relocation, reformation, and setup of marketing hub, experience-based services, and superior connectivities, and that will continue to be the focus as well in the coming years. As a snapshot for the financials, income grew 20% year on year to 13.26 million. We closed the year with the net profit just under 3 million, realizing a growth of 43% year on year. Our margin, net profit margin increased by 358 basis points year to year to 22.38%. Return on equity increased by 170 basis points to 5.91%. Our return on capital is at 8.33, an increase of 249 basis points year on year. Our net installment finance book increased by 21% to 126.7 million. Total equity base remained the same, around 50.4 million. Our total asset base is at 133.36 million, an increase of 21% on year. The cost to income reduced to 49.8% from 55.63% last year. The gearing ratio increased to 1.45 times from 1.09 times, in line with our asset growth. The leverage as well increased to 1.88 times from 1.4 in 2024, in line with the asset growth and funding of the asset growth. And NPL ratio reduced to 12.7% from 15.32% in 2024. And our provision coverage is up to 74% from 66.3% last year. Coming now is the performance on quarterly basis, which our Chief Financial Officer will give a presentation.
So, good morning. Key quarterly statistics 2025. So first I give you finance income. You can say quarter to quarter there is an increase over the quarters from quarter 1 to quarter 4. So quarter 1 2.48 and quarter 4 end up with 3.11. And net finance income also can see that from quarter 1 to quarter 4 there is a continuous growth from 1.62 in quarter 1 and 2.05 in quarter 4. So impairment provision also it remains in every quarter is around the same margin throughout the year. And as well as operating profit also you can see that there's an increase from 0.9 million to 1.37 million from quarter 4 over every quarter. So there's a growth in every quarter. And net loan book quarter 1 it was 107.29 and quarter 2 113 million. And quarter 3, 116 million, and quarter 4, 126.74 million. Continuous growth over the quarters. And profit after tax also, quarter 1 we reported the 510,000, quarter 2, 700,000, quarter 3, 820,000, and quarter 4, 940,000. So continuous growth over the quarters. There's a 7-year statistics over the period. You can see that finance income. So in 2019, it was 8.46 million, and there's a dip until 2021 due to economic condition and corona situation. And from 2022 onwards, again, it started picking up. Now it be at 11.34 million. And net income, you can see it was 5.69 in 2019. It went down, and then it started again picking up from 2022 onwards. Now it is 7.49 million net income. And operating profit also, you can see that from 2021 onwards, we started growing the company, and it is 4.72 million in the year 2025. Net profit also, you can see that so 19 to 607,000, and over the years it started growing, and now it is at 2.97 million. Net finance debtors, yes, 2019 is 98.4 million. So it went down to 80 million in 2021 with the economic conditions and the situation of the global country. And then now it's a rapid growth over the years from 2022 onwards. Now it is at 126.74 million. And impairment provision also in 2019 it was very high, and it came down to 2020 to 4.71 million because of the provisions that I written off that we have taken. Now it's stabilized in line with the growth of the portfolio. It's at 1.23 million in the year 2025. This is our management accounts. You can see that how it has grown line by line. Finance income when compared with the last year is 17% growth. Interest expenses increase of 20%, mainly because of the loan book growth as well as our loan increase in line with the book growth. Another income, there is an increase of 38%, and expenses overall, there's an increase only 7%, and impairment operating profit increased 36%, and impairment provision increased 19%, and profit after tax it is 48% increase compared to last year. Balance sheet, you can see that over the years from 2022 to 2025, total assets, how it has grown from 93 million to 133 million, supported by the increase in growth in installment finance debtors. And our loan book composition in 2024, it's almost like retail 61%. Now it is 60% is 25%, and corporates around 39%, and this time is 40%. So we used to keep the same proportion during the years to come. Also, we have planned. And gross portfolio analysis, you can see that stage 1, stage 2, and stage 3 how it is moved. So total performing assets means stage 1 and stage 2. It is 77 million December 2022, and 23 stage 9 million, 24 98 million, now 120 million. So performing assets growth as well as NPA, you can see that it was 21 million means stage 3, 21 million. Now it has come down to 7.7 million. So provision NPL ratio 21% gone down to 8.7% in 2021. In December 2022 it is 21%, and provision coverage it was 50% in 2022 and just been increased to 73.92% by the end of December 2025. So equity and liability side, you can see that the growth from capital reserve from 48 million to 50 million. From December 2022 it is 48 million, now it is 50 million. And as well as loan borrowings growth in line with the asset growth. And now total equity and liability set in this 133.3 million. So every year we have to transfer 10% to legal reserve. So out of the provision we are transferring it, and special reserve as per the articles we have to increase based on our net data. So we have increased the special reserve. And impairment reserve, there's a reduction when compared to last year because the gap between the CBA provision and our IFRS 9 provision has narrowed. So we got the approval from central bank to revert it back from the impairment reserve to retained earnings. So these are the key ratios over the years. You can see that this leverage, yes, it's increasing in line with the loan book, as well as gearing is in line with the loan book. So we can grow up to 5%, 5 times our gearing. And cost to income, you can see that the ratio is coming down. Now it is 49.8, and NPL ratio is also coming down. And ECL coverage is also increasing over the years, and return on equity as well as capital increase over the years. And normalization ratio also we have to keep maintain 90%. Now it is at 93.42%. That's it of the financial presentation. can take any
So with this, we complete the presentations for financial for year end 2025, and we open for questions. Any questions, gentlemen, ladies? Any questions?
loan growth during Q4? Yes, specifically.
So during Q4, we had a good demand for loans from retail's side as well as the corporate side, SMEs specifically where we focus. So, and that enabled us to achieve the growth that you have seen of 10 million in the Q4. And as my colleague said before, our focus continue to both the retail for diversification of our portfolio in terms of risk and in terms of value, and SMEs, small businesses, which we play a big role in the growth for financials products to the small businesses. We expect the demand to continue. As you saw, you know, the geopolitical situations for the last 3 weeks, it hasn't helped the sentiment. But our focus will continue to help our customers, retail and SMEs. We see the economy continue to grow, and there will be demand for financing in the 2026 as well to continue.
When we compare to the last year, yes, there is compared to last first 3 months, and during these first 3 months, yes, there is a growth. We experience a growth. Now it's purely depending on how this geopolitical scenario affect the entire country, not only for United Finance. So we are cautiously looking at it and see how when the loan applications come to us, also we carefully analyze how the repayment capacities of the loan applicants. So we are very cautious on that one, especially because of this situation. At the moment, when compared to the last year, there is a growth.
We hope that the geopolitical situations get resolved and bring back positive sentiments in the market. And the Oman economy is doing well, and inshallah we'll continue to focus on where we do best in the retail and SMEs. Welcome, Pankaj. Any other questions? Okay, thank you so much for attending. The question is we're saying the NPL ratio increasing. No, the NPL ratio actually improved. Actually, it improved from 15% to 12.75%. And you can see over a period of time from 21% in 2022 to 12.7% in 2025. As I mentioned, in our core focus is collection recovery and really stopping further slippage to NPL and recovery of the existing NPL. We've done well, alhamdulillah, and we continue to be our focus. The loan growth also helped to improve the ratios. So we'll continue to focus on both in enhancing our collection effectiveness and growing the book in a very prudent way. Any more questions? Okay, since there's no more questions, we conclude our presentation for the financial year end 31st December 2025. In case you have any other clarification required, you have any question, you're welcome to address them to myself, our company secretary, Mr. Hassan, and our chief risk officer will provide any clarification, any information required. Thank you so much again, and we'll see you in the next quarter.